thinking. All right, think we're live.
Cool.
Can you see me, Nikki?
Yep.
Hi, awesome. Okay, let me pull this over. Happy Wednesday, everyone. So glad to have y'all here today. We have Nicky Morong. She is a CFP, a certified financial planner. So we're gonna have a great conversation. This is gonna be just a great, super supportive for you just as business owners, as people. She's just got a ton of value that she's gonna drop on us today. So I'm very excited about that. In a minute, she will properly introduce herself, but just a couple housekeeping items. You know, if you join us live, leave a comment, emoji, question. Like, we're so grateful you're here. We know there are a million places you could be. So I just want to be sure to thank you, and someone will be entered to win my free masterclass that is how I pay myself 10K months. Even if 10K is not your goal, these are 5 questions you can use to really think about business. If you've been here for a minute, you know I'm not about a strategy in a box or some template that you slap on your business. Like, these are literally 5 questions that help you think how to get to be that business that pays yourself 5 figures a month. So giving that away, super excited about that. And then next week is our masterclass, Mastering Metrics. It comes to your inbox. It is free. You get the playbook, you get the live stream. This really came from a lot of the conversations that Nikki and I love to have. Like, we love talking about money. And with my clients, we have found $2,000 to $34,000 a month in cash, in net income, net profit, from bookkeeping errors. So it's just wild. I have a ton of examples I can give y'all, but this will be 4 best practices to use in your business and how to use them to create more revenue, more profit in your business. So these are kind of basic things that I think people forget all the time. And there's literally just money sitting on your doorstep. So again, that'll be next week. It'll be our last masterclass for at least a month while I am gone in July in the mountains with my kids. So wish me luck. But that's it for my announcement. So I'm excited to have Nikki properly introduce herself. And please, Nikki, I know some of the best compliments I get from my clients are about how they love, you know, they feel like they have someone in their corner and that I, you know, really support them in a neutral way and know the numbers and, you know, help them with all these things. So please just toot your own horn. Don't give us like your, you know, my resume version of my bio or LinkedIn bio. Like, tell us your magic, like how you support your clients. Just go for it all in.
Yeah. Yeah. So I'm a certified financial planner. I started my practice over 12 years ago, and I was an entrepreneur, right? I was like, I eat what you kill, right? Like, I was building my own practice. And I got into financial planning because my dad passed away really young. My mom had no idea what was going on with the finances. And when I was helping her sort through things, I realized that there were a lot of like financial gaps. Like, my parents were high earners. Neither one of them came from money. They didn't really know, like, they didn't think they had enough to get help, basically. It's like that whole, we feel like that way as entrepreneurs too, right? It's like, well, I'm not making enough money yet to hire all these people. Like, being in business is expensive. And like, when I make more, then I'll get help or whatever it is, right? But I kind of saw firsthand the cost of that. And so I set out to help people who were like my parents, like, right, who are employees at companies who have a paycheck, do more with their money so that they could spend more time with their kids because life is short. And then as an entrepreneur, I'm realizing that I'm working with couples, and a lot of the couples that I'm working with, one person is an entrepreneur and one person is corporate. And I'm seeing that the entrepreneur spouse has like all this money coming in, flowing through their business, right? They always feel broke. There's never really enough money to come into the household. The conversations between the couple is like, you know, well, we want to buy this house, but we don't know if we can afford it because we can't count on this person's monthly income, or like, I don't know how much she's going to make in her business next year, or like whatever. And it was typically that the woman was the entrepreneur, the man was the corporate person who they relied on for the benefits and whatever. And so I was like, okay, we have all these strategies that we can implement, but we're limited to the consistency of the income on the self-employed person side, right? Like, there's all these strategies that you can implement as a self-employed person, but you can't implement them if you don't have any cash, or if you can't get a handle on your numbers. And then the corporate person, like, they have benefits, but there's only like so far that you can get if, like, as a whole, the family's feeling suffocated because they can't live the lifestyle that they want because they're not keeping enough of what they're earning. It's like the crux of it. And so it's funny because I'm working with these clients and I am the entrepreneur spouse, right? Like, I wasn't married at that time. but I was self-employed and like, I'm a certified financial planner. I know how to invest your money. I know the right accounts. I know the right strategies. I know what to look at on like the financial planning side, but I couldn't get a handle on my cash flow. And like, I had a bookkeeper, I had a CPA. I was like networking with other financial planners. Like I almost hired another financial planner myself just to like get an objective set of eyes and like all of these things. And I'm like, I'm paying all these people and I don't actually feel like I'm saving any money on taxes. I don't feel like I can find the money to put money away. I might be doing better than some of my clients, but what does that matter? And so I started going down this path of like, there have to be other financial planners who are focused on entrepreneurs, like who are actually focused on helping entrepreneurs keep more of the money that they're earning. So I was looking for that and I couldn't find it. So I'm like, oh, nobody's teaching that. Why is nobody teaching that? And I have a bunch of theories that I'm not going to go into about why people don't teach it. But basically I was like, I got to fucking figure this out. Like, I want to have a family. My husband's a teacher. We're like relying on his benefits, his pension, all of this stuff. And I don't want to be that entrepreneur spouse that like can't give my family financial independence. Like, I don't want to be so reliant on my spouse's income and be like almost handcuffed by it, even though like he's getting burnt out at work and all of that. So long story come full circle, I ended up figuring out my own shit financially and realized that there's a process, like there's a better way to work with your bookkeeper, with your accountant, to really take ownership of your finances and to have more predictability over revenue and cash flow so that you can build wealth every single month predictably and consistently. And once I started applying that to my own finances, I was able to retire my husband, max out our retirement accounts, pay my taxes in full, and like live more of a lifestyle on less revenue. And so that's what I'm teaching people how to do now. So I still work with clients one-on-one on the traditional financial planning stuff, but I really have a passion for like helping entrepreneurs keep more of what they're earning and really be able to properly like delegate to and leverage their team, because there's so much money being left on the table. And like, nobody's really talking about this. Everyone's telling you like, make more money. Don't worry about it. Just make more money, scale. Like, everyone wants to teach you how to make more money, but nobody wants to teach you how to keep more of it. They want to teach you how to like take the more money and invest it. But it's like, how do you optimize? And so like, that's where we are.
And like, this is why we like vibe so much, because like, I'm all about creating more revenue too, because a lot of times that is the lever to press when we want more profit. And you can do really well without scaling to multi-6, multi-7 figures. Like, you could take home just as much if you're using it properly. And like, you know, in your perspective of financial planning, like they can do as much with it that someone else that maybe technically earns more or just isn't like using it properly can do. So like, thank you for sharing that. And I think, you know, the way I frame these live streams is mindset, strategy, organize, implement. So I think like that mindset piece that you started with, like that's what feels natural to me to start with, is like, so many business owners want to bury their heads in the sand with accounting or financial savings. And like, you can pay someone to do this. And like, they don't realize that like, they think they should be at a certain point or that they should be able to do it all and figure it all themselves. And it's just like, nothing is farther than the truth. Like, you know, hiring out support is what is able to get them like these results and really get them, you know. Do you want to kind of speak to that? Like, that's kind of where we started with the bio, but speaking to that mindset piece first that you see people come in and have to work through.
Yeah, I mean, so some of it is just like feeling like I don't have enough, so I can't afford to invest, right? Like I can't afford to hire advisory support, or I can't afford to whatever the case may be. You're 100% right that like, yeah, you can hire people to delegate to. I think that that's important, but I think it's also important to have the mindset that like, you're the CEO of your business, you're the CEO of your finances. And the same way that if you were going to go hire somebody to like build a website or help you like build out a funnel in your Kajabi or whatever, like you need to have an adequate like scope of the project, so to speak. And like, you are the person who's responsible for the outcome. So like, part of it, this is like an unpopular opinion that I think that I have, but it's like, I always think it's easier to spend the money than to do the work. It's like I have a million untaken courses in my inbox.
To that point where that gets to be fun. It's like, I'd rather spend the money than figure this out myself, because I can literally see the money come in when I open up the space for that. Like it, and I see that just as like, are you frozen? Are you there?
No, I'm
Oh,
here.
no, okay. I see that too, just with like my VA, like as soon as I give her more work, like more clients come in. And it's just like, that gets to be a fun thing for business owners to play with, is that like, when I create that space and open it up, like it creates results. And so does that make sense? Like,
Yes, but it has to be
it.
like, but it has to be the right people, right? So it's like, yes, you can have great results by hiring people. It's easier to spend the money in some ways, but it's also like really easy to like put a Band-Aid on it and say like, oh, okay, I need a bookkeeper. Like, who's the cheapest bookkeeper that I can find? I'm looking for a bookkeeper, like on a Facebook group.
What's your hourly rate? Like that, I'm just like, we're not a fit. If that's like your first question. Like,
well, and there are people, like, it's funny because it's like, I get like frustrated because people try to like sometimes be snarky about like, well, you get what you pay for or whatever. And like, I've spent a lot of money paying people who don't deliver the results. Like you can have not a crappy bookkeeper. You can have a bookkeeper who's just like a technician who all they do is reconcile your stuff and they're not really looking for opportunities for you. And you can pay them $15 an hour and they're a VA on Fiverr or something. There are also bookkeepers that do the technician role and they might charge you $100 an hour or $150 an hour or whatever. You're still not getting any advisory support. You're just getting somebody who knows how to do your QuickBooks. The $10 an hour person or $15 an hour person might be just as competent as the $100 an hour person. It's less likely, but like when you get into like the $50 range, like the middle of the road range people, then like, yeah, they might be just as good as the $100 person. The difference might be that like the $100 an hour person has more team. They're going to answer your emails faster. They have a little bit more support, but like at the end of the day, you're not going to get somebody digging into your books, finding you $34,000 because that's not their job, right? Like their job is to do just the reconciliation. And so I think like as entrepreneurs, yes, delegation is really important. And it's nice that you can pay somebody to get better results than you can get yourself. You don't have to do it all yourself. That's powerful. But the key piece in the delegation part is you need to understand what you're looking for and the scope. And I think that's the part that like, I didn't understand. I didn't know what bookkeepers do. Like I'm a certified financial planner. I didn't learn that when I was getting my CFP or when I had got my finance degree or whatever. Like, what does a bookkeeper do? They reconcile your books. Like, yeah, sure. But what do they really do? Like, no one actually knows what anybody really does. And so it's like, if you're the business owner who's just hiring a bookkeeper because you're supposed to, because you need books, because you need to be able to give it to your accountant at the end of the year to file your taxes, and you don't really understand the value that they could provide in terms of like a return on your investment, you're going to hire the wrong person. And so like, it's easy to just spend the money without doing the work to find the right person, but you have to like be willing to spend the money. You don't have to spend the most money, but you have to know that like there is some degree of you get what you pay for and that there are different roles. Like a bookkeeper isn't a bookkeeper, isn't a bookkeeper. An accountant isn't like these people. Yeah. I can call myself a financial planner. There are things that I do that other financial planners don't, and vice versa. And so part of it is like, you can't properly get served. So you have to get into the mindset of like, I'm the CEO. I need to know enough to be dangerous. I need like a kindergarten or a first grader level of understanding of what are all the things that a bookkeeper could possibly do, and what do I actually need now? What might I need later, and what might I never need, kind of thing. For
having that conversation with them, because like it's like we kind of need to translate, because like people come to me and they're like, oh, putting these in categories, or trying to think of other things they use, the terms that I'm like, those aren't accounting terms. So I have to be like, oh, they mean putting these in accounts, and oh, whatever. I can't think of what people call reconciling, but I'm like, oh, that's reconciling. Like we have to kind of, and I know with CFP stuff, like when I talk to my CFP, I'm like, wait, break that into English, like help me understand, like, so it is kind of this like beautiful balance of like conversation of like interpreting, like, okay, the professional is like interpreting what the business owner is trying to convey, and vice versa, because we can kind of get in our own, like, this is what I see I do, but then I need to communicate with the business owner that like, okay, yeah, we're talking the same thing, it's just like different words. Like, so really making sure we spell that out, and that the CEO is making sure that they feel supported and heard. So going from the mindset piece to their strategy, because I know we talked about like the money that we found for our clients, but you've mentioned like $107,000 per year in taxes that were saved. Do you want to talk, like, as we move into the strategy piece, kind of tell us like some of the strategy pieces we can think about, or something we can kind of like sink our teeth into type of thing?
Sure. Yeah. So, so I think this is part of like you have people in your financial team, right? And the value of the people in your financial team has a direct correlation with actually like what they're doing for you and what your understanding is of what they're doing for you. We kind of talked about that in the mindset piece. And so like talking about this specific client, full disclosure, like the reason why I could help this client save $107,000 in taxes a year is because they make multiple seven figures, right? Like they're paying hundreds of thousands of dollars a year in taxes. So it's proportional, right? But it's like this client in particular, like as an accountant that they're paying a lot of money with a firm, with like a big accounting firm. It's not just like a solo guy, has an in-house CFO and bookkeeper, like who does their bookkeeping or whatever, and all their like bill pay and invoicing. They hire a third-party company who does like all of their HR and benefits and payroll and whatever. Like this is like a legit multiple seven-figure business, right? And so when I came in to like help them like dial in what they need to invest to be able to achieve their goals. Really, it's like, yeah, we're pretty good. Like we're good at making money. We have a team, we have our people, like we're good on the tax stuff, we're good on everything. We just need help with investing. But then as I'm looking at their books, I'm like, okay, wait a second. Like, yeah, you're incorporated. Your accountant did a good job of saying you should incorporate. You're paying yourself a salary. You're taking owner's draws, but like your salary is so high that you're paying an extra like $50,000 or $60,000 a year in taxes because you're just like paying yourself a vanity salary. So like that's an example, right? It's like people talk about like, oh, you should incorporate, you should become an S corp because you are going to save money on taxes. And like that's something that I dealt with personally when I first incorporated, like as a business owner. It's like, yeah, I have a bookkeeper, I have an accountant. My accountant didn't suggest that I become an S corp, but I heard from somebody that I should incorporate because it'll save money on taxes. So I went to my accountant and said, do you think I should be an S corp? He said, yeah, sure. That's a great idea. You should be an S corp. So I filed as an S corp. And guess what? I didn't save a penny of taxes. And I actually spent more money being an S corp than I would have otherwise, because now I had to have a corporate tax return that somebody had to file. And now I had to run payroll and like all of these other things, right? So it's almost stupid. Like you want to bang your head against a wall and be like, why the hell wouldn't that accountant say like, yeah, sure, you should incorporate. And when you incorporate, here's how it works. Here's the mechanics of how the taxes work and what you want to make sure to pay yourself and how. And here's how you actually save money. But nobody does that.
Language. Yeah. And the previous CPA I had, he was like a personal friend that my husband went to college with. So he was our CPA. Full disclosure, I don't file taxes. Like I'm technically a CPA, but I am not filing taxes, not doing my own. No, thank you. So he did it, and I kept mentioning to him, I'm always like, S corp, is it time? And he's just like, people like throw that out there like it's the answer to all things, like it's the holy grail of blah blah blah. And he was so conservative about like not doing it, and finally like reached an revenue income level, and the new tax preparer was like, oh, we need to do it. So I did switch to S corp, and that's the thing with like reasonable compensation is no one can tell you what freaking reasonable compensation is. Like no one can tell you. So it's like if it's this, then yeah, you might save on taxes, but if reasonable compensation is this, then you won't. Like, and so it's this like, even the person that told me to do S corp election, I'm like, well, what do I pay? And I've done continuing education about S corp election and reasonable compensation, and still nobody knows the answer. And I'm just like,
right. And this is probably like gibberish, like to the people who are watching, right? It's like, okay, I don't know what you're talking about like reasonable compensation or an S corp or whatever. Like, do I need to know? Like, the point of it is that for one person, an S corp might be the answer, and it might save them a shitload of money in taxes. They put their salary as this, they take their draws as that, the rest is cash, and they're saving like direct money in taxes. For somebody else, like if my spouse is making whatever. My spouse is making enough to cover our household. And like what I'm bringing in from my business is really going into like our savings and investments for the most part and slush money. Then it's like, and then I look at like how things are set up in my business. It's like my business is paying for our health insurance. My car insurance is on the business with my car. My cell phone is on my business. And I have like all these like personal expenses that are legitimate business expenses on my business. And then I'm maxing out my 401k and my business is doing a profit share and my business is contributing to my health savings account. And my business is like putting all this money away for me that, you know what, is technically compensation. Like it's not hitting my bank account, but the value of having $40,000 going into my 401k this year to grow for my future investment goals, or $7,000 going into my health savings account that I can use for tax-free future healthcare expenses and whatever else is really, really valuable. But all of those things, like all of these like fringe benefits, if you, I guess, so to speak, your salary and benefits that you put against your business, reduce your profit margin. And so if you are somebody who like doesn't need as much cash for coming into your bank account, you really can leverage a lot of tax strategies to be able to stuff away money and compound it and grow it and invest it and whatever. And you might not even need to file an S corp, or like the value of an S corp might be like this much to you because you don't have any profit to shelter from self-employment taxes, so to speak. Like basically you're going to pay yourself a salary and then you have no profit left and whatever. But somebody else who makes the same amount of money as you, but who needs to pay their mortgage and do whatever, or they don't prioritize retirement savings, or like right now it's not a big deal, or they get their health insurance through their spouse or whatever, that person might have $100,000 of profit that like, hey, if I don't file as an S corp, I'm going to pay $15,000 more than if I do. So it makes sense for me to file as an S corp. And it's like, it's a delicate balance, right? Because it's not all or nothing. It's not like, do I stuff my business with benefits or do I take the most home? It's like, what benefits do I need? How much do I need to take home? Let's find the balance and let's figure out how to leverage this S corp. And so with this client, like I took one look at her taxes and her cash flow and everything, and she kept saying like, oh, I spend so much money in taxes, blah, blah, blah. I'm like, well, you need to look up your salary. And she's like, oh, me and my accountant already talked about that. We've revisited a million times. It doesn't make sense. And I was like, what do you mean it doesn't make sense? And she's like, just the tax savings like isn't meaningful. And I was like, if you reduce your salary by this much, you're saving $60,000 a year in taxes, literally. And she was like, what? Okay, maybe we need to revisit that. And I was like, yeah, and that's like a really conservative reduction in her salary. Like it's arguable, like she's paying herself like almost $1 million salary. Like
she's not going to miss it.
It's like you know, anyway, so it's like, but that was only part of it. Like that was only like half of the tax savings was on the salary thing, but nobody, you have all these people looking at your stuff and nobody's saying like $60,000, like how much value is $60,000 a year? So it's like her child, people always, I hate like the Instagram and like TikTok people who are like, you can pay your kid, you can pay your kid, you can pay your kid, just whatever. And you can put them in a Roth IRA. It's like,
me when they see that stuff and I'm like,
well, and I even fall prey to it too, because I'm like, I see it and then I start believing it. And then I reach out to my accountant and she's like, for the 10th fucking time, like, no, you can't pay your 1-year-old on your S corp or whatever.
Yeah, when are my kids going to start helping with the bookkeeping? You know, and like, and some people can legitimately like make it part of their marketing. And it's like, okay, the child is part of the marketing shoot and they can get paid for that, like as part of these pictures that they're doing.
But it's not
like,
substantial.
Not enough to really like be like, oh gosh, we need to like do this right away. This is gonna like save so much money, you know, like it's just, but yeah, it is. It's like the Instagram, like it, like I see all these bookkeeping Instagram stuff and I'm like, and I just want to put at the end, like, maybe it depends, you know,
Sure.
like this is not like flap it on everybody. But yeah, go back to
this client, and there's been other clients, like I've had clients whose kids who are like 12 years old who are doing their invoicing or who are posting on their social media and like whatever. And it's like that kid is legitimately working in their business doing $20 an hour or more work that the client was paying someone else to do before, but that person left or whatever. And it's like, oh, so you really like, you could be saving another you could be saving $5,000, $10,000 in taxes by paying your child. And like, you can defer all that money for your kid into a Roth and like build a legacy. You can have them pay for their own summer camp. You can have them pay for their senior trip, like all of these things. And so like, that was another strategy that like this specific client, the $107,000 tax savings client, it's like her kid legitimately works in the business. Like, legitimately like teaches trainings and like all of this stuff, but like just doesn't get paid because like, guess what? It's a family business. Like, you're kind of expected to help out. And it's like, there are so many people who are like BSing that their kid works in their business, and this kid is actually working in their business and could be making, whatever, like $13,850 is a standard deduction this year. This kid could be making $13,850 completely tax-free. They could make another $11,000 on top of that, paying only like 10% in taxes. And this client is in the highest tax bracket. And like, they're paying close to 50% between like state and federal taxes. And nobody's saying, hey, you should put your kid on your business. So it's like, so the 401k, this client had a 401k. They have other benefits through their business that the HR company that they work with is instituted for them. They're not taking advantage of any of it. And it's like they're maxing out the 401k, but they're maxing it out in like the first half of the year. So they're missing out on the match for the whole second half of the year, because that's 401k, the match has to be equal to the contribution throughout the year. And part of what's messing up the match is their salary. And so this is like, I'm not like explaining this so that you can like furiously take notes and figure out like match, blah, 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 because like it really is different for every person. But it's to say that like each thing individually might seem like a lot. It's like, oh, you can save $2,000 here, $5,000 there, $10,000 there. Some of the savings is in like the compounding and the interest long term. I didn't count that in the 107,000, but that's additional value.
That's just like extra,
and it just gets left on the table because it feels like it's not that much. But if you focus on the tax strategy, like $100,000 is a lot of money to be able to put back in your pocket every single year. Like that's your financial independence, so.
and like the piece of a lot of times when the professionals come in and stuff changes, but they're doing like Sally, SALY, same as last year, like that happens a lot. So I feel like this kind of goes into like the organization piece of like, okay, what can someone do first? Like, do they, hire someone? Do they kind of step back? Like, what is kind of, because obviously like every person's situation is a little different. So it's not like, here's these 7 things in order of importance you need to do, but like, where can someone start if they're like, oh, dang, like I need to look into this a little bit more. Maybe I'm making more revenue. What's kind of like a good step?
Yeah. I mean, so I think, so it's difficult, right? Because it's like, what are you just going to like Google and figure out all of the, like how to put it all together? It's almost impossible, right? I mean, that's part of the reason why I built my program to like teach other people to do this. I'm not trying to like pitch right now, but I think that like the first step is really to figure out like, okay, it's almost like sitting down either by yourself or like with your spouse if you make financial decisions with somebody else or like do money with somebody else, and to figure out like, in an ideal world, how much money do I need to spend from my business, and how much money, like, what are the other things that I want to do? So it's like, am I focused on just like maximum spending, maximum current spending? Am I focused on investing in like future growth? Am I focused on a mix? Do I have anything else on the horizon? Do I have like, am I thinking about buying a house? Am I thinking like, just try to think of the things that your money touches. And I think that that's kind of nebulous, but like, if you're thinking about buying a house in the next couple of years, your salary matters more. So when you're talking to your accountant, if you're an S Corp and you're talking to your accountant or whatever accountant that you hire about salary, then you're going to say like, hey, I'm looking to buy a house in the next couple of years. So like, I might need my salary to be like a little bit higher based on that. What do you recommend? Are there ways that I can like reduce my taxes while still having my salary a little bit higher? And they can kind of work with you of like, okay, yeah, maybe you're putting $80,000 on your W-2 to supplement what your spouse is earning, but we know that your retirement dollars will reduce the taxes on that. Your HSA will reduce the taxes on that, et cetera, et cetera, et cetera. So like trying to like draw the parallels between like how does my money impact the other financial decisions that I want to make? And then communicating those financial decisions to your team is really helpful. So like you having clarity on like what you're actually trying to achieve and your goals is really important. So I'm trying to like, I'm trying to think of like whether or not there is, I need to make like a checklist or something. Do you know what I mean? Like it's like a life changes checklist or like something like that of like.
Because I see what you're saying. It's like, okay, kind of what do you want your goals to be like? And it kind of goes between like plans of purchasing, or do I want more take home pay, or do I want less take home pay and investing more and kind of building that out. So it's kind of just like you could kind of have like buckets of like dreams or goals, you know, and kind of depending on that route would be like, okay, then you need to decrease your, you know, take home pay or increase your take home pay, or you know, whatever else that you do. Like if you're planning for a baby and now you need to like, okay, get healthcare through the thing and, you know, move
Yeah.
that around. Like,
So the baby
that's
actually,
kind of,
the baby example is like even really good. So it's like, so the hard thing is that your team is not mind readers, right? So it's like, you need to hire people. But if you're hiring people just starting out and you're trying to hire people that are like more affordable and whatever, and might not be doing the full advisory because you can't justify it or whatever, then you need to bring to them almost like too much information and kind of like be a hound, if that makes sense. Like no matter how stupid you feel, no matter how like out of your element you feel, you just need to be committed to like be your own advocate, because at the end of the day, if your tax bill is higher than it should be, you're the one, it's on you, right? Like you're the one who has to pay the bill. It comes out of your bank account. So like with having a baby or whatever, if you live in a state that has like paid family medical leave, what your salary is matters, like related to your benefit, right? And if you don't understand that, like you can't talk to your accountant and say like, hey, I'm trying to get pregnant. I mean, obviously, like if you have the luxury of like planning to get pregnant, right? But like, hey, I'm planning to get in the next year or two. Like I looked up on the website or whatever, like I looked up on the state website that this is what my state paid maternity leave would be, or whatever my paid family medical leave would be based on my salary. I looked at it, and if I bump my salary up $15,000, I'll max out on that. Is that worth it? Like, is the extra taxes that I'm going to pay worth the extra benefit? Or like, hey, I'm going to have a baby. Is there anything that my business can put into place that makes sense? And then actually look at like, all right, well, I don't have a high deductible insurance policy right now, but if I do get a high deductible insurance policy and then I get a health savings account, then my business can fund my health savings account and I can pay for my doula and my night nurse and whoever else that I want out of that tax-free, right? So there are tax benefits that give you more money now, right? Like I can put money away into a dependent care FSA and then use that to pay for my kid's nanny now, right? It's this year. Or there's things that you can put away and it's for future expenses. And so you almost need to paint for your team a picture of your life to be able to say like, and of your business to be able to say like, here's what I'm working towards. I obviously want to pay as little taxes as possible within reason, but I understand that there's some benefits to paying more taxes, like paying more into Social Security or whatever. So can you help me understand the opportunity cost of these things? And if your accountant kind of just like brushes you off or like doesn't want to talk to you about it or kind of like dismisses it, then like maybe that's the wrong person for you. Or they might say like, hey, you know, that falls into advisory. You actually don't pay me enough to do this. It would cost this for me to advise you that way. But it's like a conversation. And like,
opening the door.
Yeah, I used to ask my accountant all this stuff. My old accountant, like 2 accountants ago, I used to ask him all sorts of stuff and he would just like make me feel like an idiot and brush me off. And it's like, why am I working with this guy? Like it has to be costing me money, because if I don't intellectually understand something and I'm still asking you questions because it's not making sense to me and you can't explain it to me, then something's missing, right? So
that's the conversation I have with clients a lot, because it's like I'm relying on their CFPs and their CPAs. Like I'm not the tax person and I don't have the whole picture of everything. So like sometimes they'll be like oh, well, my accountant never told me this, or never, whatever, had this conversation. And I'm also like, well, did you ask them? Like, maybe they do more than just prepare taxes like a robot, like have that conversation with them, ask them first. Like, don't, we just assume kind of like maybe they hired them 5 years ago and all they did was want like easy breezy taxes in and out the door, whatever. And it's like, they really might have this whole set of services that like you haven't tapped into, or they might not, but at least like have the door open, like communicate with them and have that conversation before you're just like, oh, they're shit and like they're not doing their job. It's like, maybe they just think that's what you want and they're not trying to like go dig and, ruffle feathers and be like, well, this is what she wants every year. She comes in, drops off her stuff and leaves. Like, so definitely having that conversation, opening the door. And I love how you framed it as like, get the picture, get your vision, kind of what are your goals, kind of have that ready to just bring to them. And yeah, if they're not listening, they're not responding, then definitely like there's thousands of service providers out there, like find another one. Yeah, that's just a great starting point, I think, for people.
Yeah, I think it's hard too to like find new service providers because it's like you build relationships and people are like all about the relationship and it feels like people and whatever, but it's like,
like,
yeah, it's like it sucks, but it's not personal, right? Like this is like there's a lot at stake and like you're responsible for the well-being of your business.
Well, and just from like, because the guy that did my taxes, he left public accounting, like so many that I know. And so I had to find a new one, and it obviously was not anything personal, but going in with a new person, they're like looking back through prior years and asking questions. I'm like, oh yeah, what was that about? And fortunately, our friends, I can text him, but he's like, oh, well, like we had multiple changes, multiple years in a row, so it's just like having to remember like, oh yeah, okay, no, we got it. Like just communicating all of that of the why and what's going on. And yeah, we're kind of like in the middle of things. So, yeah, it's not like it's a small task, but especially if someone is not listening or like brushing you off or making you feel not smart, that's just kind of like a red flag.
Yeah, I think like getting in, I know this is like getting back to mindset, but getting in the mindset of like, I'm allowed to understand things or whatever, like, and I'm not expected to know this. Like, I'm an expert at what my business is. I'm an expert at like what my business is. And I'm an expert at like what my personal goals are and my priorities are. Like, I know what I want my life to look like day to day. I'm not an expert in tax preparation or in bookkeeping or in legal or in whatever. Like, that's why you're hiring these people. So it's like, I get that it's annoying for some people to like answer questions because they feel like they shouldn't have to or whatever. But it's like, you have a right to ask questions and to understand what's going on. And I think that like what happens so often is like, we think we're better communicators than we are, right? Like we think that we're way better communicators. It's even like last night we had a babysitter or whatever. And then it's like walking her through like what we do for the bedtime routine. Like, it's like you put it through step by step. And then like, we forgot to say like, no matter what, like, even if his pull-up is clean, like change his pull-up into a fresh diaper. Like I gave her the fresh diaper with his pajamas, but she looked at the pull-up and was like, this is clean, and put him in bed. And like this morning, he was just like, whatever, you don't need to know this. But it's like, we forgot one stupid thing out of like the whole bedtime routine, but like you expect the other person to operate the way that you do. And so it's like, with even how you spend the money in your business, like if somebody looks at my business expenses, like if you look at somebody's like bank statement or credit card statement, it's like, you don't know what any of that stuff is. Like, what did you buy at Sunoco? Like, was it gas? Do you buy chips and soda at the gas station? Like, are you I know you can't buy scratch tickets on a credit card, but like, do you know what I'm saying? Like, they're just line items that are kind of meaningless. So it's like, you give your accountant or your bookkeeper like all of this information about your transactions, and then it's like your bookkeeper is going through and they're saying like, oh, okay, Nordstrom, that must be a personal expense, not deductible, and they're like backing this stuff out as like an owner's draw, and then it turns out that like the Nordstrom purchase was like for an event, or it's like it's advertising expense, or it's like some kind of marketing thing or whatever, and then it's like all of a sudden you have like thousands of dollars of things that like actually are legitimately deductible expenses that were excluded and you're not getting the benefit from, you would never know that because you're not going to comb through your taxes, through your transactions because you have a bookkeeper. Or your bookkeeper, like it's a legitimate business expense, like they believe it's a legitimate business expense, but guess what? The IRS doesn't think so. So it's like, all right, I don't care if that dress was for a speaking gig, like you can't deduct clothing because you can wear it every day if you wanted to or whatever. So it's like all these little nuances that it's like, you think like, oh, I'm giving them this information and they're going to do their job with it, but they're going to do their job with it with their lens and their expertise. And they're going to make a lot of assumptions because they're human and that's what they do. And that's what helps them be efficient at their job. They can't comb through and be like, oh, you sent that client flowers? What is that? Like, oh, client gifts can't be more than $25.
We are the people who I'm like, in the beginning, I'm like, you're going to be so annoyed by us because we're going to ask you so many questions. And then from those questions, we're going to start creating rules from that. Like, okay, so can we assume if you purchase this, then it is this. And then if there's an outlier, then we're going to like go back, or we take on books from someone else and we're kind of comparing what was put to previously. And it's like, okay, we need to ask about this. Or like, can we safely assume? And like, that's why Amazon, Venmo, like all this stuff, it's just like, okay, like Venmo, we're asking because we want a vendor on it, like a name. But then also with Amazon, it's just like, okay, like, are you only buying office supplies with this? Like, or does we need to ask you about this every single time? Like we're having those conversations because it's like, makes such a difference. But we are a little bit different than some people.
Very different.
Yeah.
Like I want to emphasize that like what Jordan's saying is like rare. Like most bookkeepers will not come and say like, oh, Amazon, what's this? Like they'll just either automatically assume it's office supplies or something else, or they'll automatically exclude it. Like if something reads to them as personal, like Starbucks is always out for like, they'll never ask you. And like, I've seen so many clients who like, I have clients that are hair salon owners. They're buying Starbucks for all their girls or whatever. Like that is actually a legitimate business expense. They're not picking up a coffee on the way to work for themselves or whatever. So it's like
the meals and entertainment. We're like, okay, this looks like entertainment. Was there a meal in there? Because meals are deductible, entertainment is not. So was there food involved? No. Okay, it's all entertainment.
Yep.
Like, but otherwise it would just all go to entertainment if we didn't ask. Sometimes golf, like you could have like $50 to meals or something. But yeah, all that stuff. But I love that we're coming back to mindset because with the implementation piece, that's kind of what it comes back to is mindset. It's like if you're not implementing, it's probably because of a mindset thing. Like it might be literally like, hey, I just need to sit down and figure out what my goals are, kind of what my life vision wants to be, kind of like actually do that work. And then if you're not contacting people or you're not reaching out, then it's kind of that mindset piece of, okay, well, am I thinking that I do it the best, or do I feel intimidating reaching out to people, or, kind of all this other mindset stuff that can come up, or I can't afford it, or, I'm not at that level in my business yet. Like the implementation piece to me is just always so intriguing because it's like, is it really just like you don't have the tools to implement, or it's like it comes back to what's going on in your mind with the story? I always like to say like that famous question, what's holding you back? It's like, what is the reason you're not, why aren't you doing this? And really just sitting with that and figuring out like, what's the next easy step I can do? What feels good to move forward? Maybe it's literally like you were talking about, Nikki, getting the vision, kind of getting the goals, sitting with that, like maybe starting to, think about like, okay, well, maybe I should talk to this person or this person, and kind of just like creating an easy next step as you're, not like jumping in 100%. Like I'm going to call 5 CPAs and 5 CFPs and interview everyone. And like, okay, well, let's just like baby steps and figure it out. So that's what I think is so cool that you brought up about the mindset piece, because it's not all like goes back around. So I know we're getting up on our sorry. How can people work with you? You told us about your course, so tell us all about it, where we can find you, what the deal is, all that stuff, because I know this is just such a relevant conversation for people that we want to make sure we know all the details.
Before I answer that, I think one more thing on the implementation thing is, if you do nothing else, if you do have people hired, like I know we briefly touched on it, but like if you do have somebody who's doing your books and somebody who's doing your accounting, go to them and ask them, like, what do you do? Are there things that you do for your other clients that you don't do for me?
So, yeah.
What and why? And do you think that that would be beneficial to me? It doesn't mean that you have to hire them or upgrade or whatever, but like to understand what you're getting and why and what you're paying for, I think is really, really important. And I think that that can start to like help you understand like whether or not this is the right person for you, and also help you be able to like see that like what the next step might be with them, you know? So I think that like that's important. And then obviously if you don't have somebody, yeah, sure, you can interview people. Just make sure to be like really, really specific about what you're looking for.
Yeah, great point. Great point. And that like brings up too for me, like I did bookkeeping just for 5 years, and then it's been the past 2 years that we've done this coaching one-to-one stuff. And it was like, you know, a ton of my clients didn't know what I was doing. So I was reaching out to them and letting them know, because they literally still, when we thought of me as a bookkeeper, and there's this whole other, you know, section that like multiple ones have, you know, hopped over the fence, because like it just made sense to like take that next step and like continue the relationship further. So like just being on the provider side, like you've already built these beautiful relationships, like why not explore what it could look like to do a little bit more, because the person might be open to it. They might have tons of things in their back pocket that they just didn't, you know, they have all these stories and assumptions and whatever that maybe they thought, oh, she wouldn't want that anyway, so I'm not going to bother her. So yeah, you being proactive and bringing that could just open up a ton of possibilities. Good point. Good point, Nikki.
Yep. So my program's called Profit to Wealth, and I'll give Jordan the link, or I'll drop it in the Facebook group. But basically it's a 6-month group program where you can get support around really understanding how to keep more of the money that you're earning in your business. So one side of it is about maximizing profit. It's really understanding like what the different pieces are of your compensation, like how to maximize the different tax strategies and benefits available to you as an entrepreneur, and then how to understand actually how to implement it with the variable income that you have month to month. Like, how do you make sure that you pay yourself what you need to, and that your expenses are what they need to be, and that your benefits are actually, that you're actually funding your benefits properly to actually get the tax benefits and all of that kind of thing. And then the other half of it is building wealth. So it's like, how do you take those increased profits and leverage that into wealth? So how do you use it to create passive income and to achieve your financial goals and build a legacy? So a big part of that is like understanding how to properly invest your money, but to do it like every single month, regardless of revenue. So there's a curriculum, but the program is like 6 months live, and you have one-on-one support with me, you have group live coaching calls, and then you have avenues to be able to like ask questions on a weekly basis, so that as you are working with your team and delegating to them or building a team, you actually are able to like more efficiently work with them, right? Like you actually understand the different components so that you can better guide them, right? This isn't for you. Like, this isn't like how to be your own bookkeeper or how to be your own financial planner or how to be your own CPA. This is like, I need to understand the mechanics of my taxes and my compensation so that I can say like, now that I know that these are the options, I actually want a little bit of this, a little bit of that, a lot of that. How do I get it done? And then like, you actually know who to ask the right questions and who to put in place so that you are operating more efficiently and it's taking you less time, but you're getting more results. So,
So is it like an open cart and it starts and it runs for 6 months, or is it kind of like you can sign up anytime and it kind of rolls for 6 months?
So right now we don't have an active cohort. There is one starting July 10th. So right now I'm like working on opening the doors for July 10th. So you'd go in July 10th and would run until the end of January. But we'll be doing like enrollment every 3 months.
Nice. Good to know. Yay, good. Well, thank you. It was so great having you, Nikki. Be sure to drop the link below in the comments or send it to me and I'll put it in there. But it was so great having you. We really appreciate your time. So
thank you so much. This was fun.
Thanks. All right. Have a great afternoon.
Okay, you too. Bye.